However, last few years we have seen an exponential growth in real estate sector. The growth and outlook continues to be optimistic. Banking on this sector, today we have with us two real estate and finance professionals who have launched an AIF fund. This fund seeks to have better investment opportunities and deliver exceptional returns to its clients. The fund's name is Finlabh Reality Scheme 1 and the fund is managed by Vibhum Finlabh Solutions LLP. From the fund management side, we have with us Mr. Suman Memani, who has been into real estate development for the last decade, and he also has an experience and expertise in capital markets. Also, we have with us Mr. Chirag Patel, who has been into raising funds for developers for the last 15 years. Hi, gentlemen. Welcome to the show.
Hi.
So, Chirag, why have you launched an AIF fund and not a PMS fund?
See, basically, AIF fund has an advantage of 49% allocation in equity and 51% in real estate, in debt funds. So basically, in PMS, you are restricted only for equity investments. You cannot invest in a debt category of investment option. So that's the reason in order to tap the potential of debt as well as an equity market. So we felt that AIF2 is the best ploy where we can get where we can tap both the returns, right, from equity markets as well as from while lending it to real estate developers.
So the fund is more focused towards being a debt fund rather than being an equity fund.
Yeah, so basically our major focus right now would be to invest in real estate, what we call projects, but we are also open to exploring opportunities in equity side, but that would be at a later stage when the fund develops and fund matures.
Coming to Suman, what type of projects are we planning, considering that it's going to be a real estate developer?
Considering real estate fund, we are focusing on primarily on the redevelopment projects on cities like Mumbai, Pune, and across neighboring areas of Mumbai. The focus is that our strength of mitigating the risk is very high in redevelopment business, because we undergo on such projects which are owned by, where the land are owned by the MADA and which is given on the lease to the tenants, and so the redevelopment projects gets full clearance from the land side. So what we get from the government is only the FSI, which is payment to the projects. And apart from MADA, we look to the collector land where the mitigation risk is again low. So this type of projects we are looking into the real estate segments where the risk is low, safe bet is there, and the investor gets the money with high returns.
That's really great. And considering that Vera also has come into picture, life actually becomes all the more easy.
Yeah.
And avoid complications by default actually we don't have to.
Right.
That's it. And Chirag, coming to you, as you specialize in fundraising for the development and development. So what is the due diligence or minimum requirements that you will be going through before identifying and investing in a project?
See, basically, we are targeting promoters having experience of more than 5 years in real estate development, or maybe a 5 lakh square feet which they have delivered. So we are open to funding developers who's what we call having a good experience in real estate development, and basically their comfort level of the promoters is of paramount importance to us. Doing the background checks, having no credit default history, if at all any loans have been taken in real estate space, so they have serviced regularly. So these are the broad parameters we are looking to tap the promoters who want to go to the next level from being a small scale developer to a mid-sized developer.
Okay, as you said, 5 lakh square feet itself actually justifies the credentials of the deal.
Yeah, so means basically who wants to go to the next level now, means the mid-size category. Right now is from a small scale developer to mid-size developer. So that cusp of development we are tapping into.
What is it that within the project, how will you be standing? Whether it is under the initial stage?
Yeah, so regarding an investment philosophy, I would say we would be targeting projects who have got basic approvals, but they want money for further approvals. So basically basic CC they have got it, but they want funds for getting further approval. So we are more than happy to fund them. In that way, our risk is also mitigated since we know where the funds are going. And another category of developers we are targeting where the last mile funding is required. So maybe 90% project is complete, just to stop that arrangement they require. So we can come into and plug that requirement.
So it's going to be a mid-size to a small size.
Small size, I would say, not even mid size, only a small size developers.
So
Because
that around G plus 20 is
G plus 20 or 25 structure, I think the max we are going to target.
So, what is the fund size that you're planning?
We are right now looking to fund size of 50 CR, and there is an greenfield option of 50 CR where we can further keep it once we get a very good response.
So initially we will be starting with 50 CR, and as we see more opportunities, more focus, another 50
CR will be continuing.
Okay. But are we planning to use the entire 50 crore to begin with, or like
First of all, yeah, thanks for saying that. First of all, we'll bring the launch of the scheme by 20 CR, where we'll be categorically very choosy on the developer side. We'll be, as I'm again and again focusing on the risk, because we want that the capital should be intact. So, coming back to the question, starting with 20 CR, and then we'll be putting up once it is deployed and safely deployed, then we'll be deploying further 30 CR.
So Chirag, what is the expected tenure of this entire fund? What is the
Fund
life
is
cycle?
7 years plus extendable up to 2 years. And if you say for the point of the investors, they have a locking period of 3 years, which afterwards they can withdraw if with the promised returns which we are given.
So 3 years it's going to be compulsory.
Yeah, you have to invest because any project means it will have a horizon of 2 to 3 years. So means it's very minimum 3 years locking needs to be there for the investment.
So Suman, coming to what we went through the prospectus, you are also looking for opportunities across pharma and technology sector. Can you elaborate a bit more on that?
See, focus is right now on real estate, but we are open to that category also. But first fund will be focusing totally, we are dedicated to real estate. We are open on that line. Once we launch our second 50th year, the greenfield option, we'll be specifying and we'll be looking to all those sector, pharma and everything.
Pharma and tech sector is where
Yeah.
probably you may be,
Probably you might
but
be.
not initially.
But as of now, no.
Why pharma and technology sector? Why not other sectors?
Pharma, see, it is an evergreen process. Means the industry is going at a good rate, and people, small scale industries are setting up. So we see that there are a lot of opportunities there. So we can get it, and a lot of startups coming on from the IT segments, and people are in need of funds because we are already getting the proposals, but with a good return, they assure return. People are very highly tech and all that, and good education background. But we will be choosing only after the second launch of this scheme.
Okay. So what are the kind of returns that you are banking on as a part of this program?
So basically, we are targeting returns of 13% fixed. We are committing to the investors, and above 13, we are having a sharing of 85%, 15%. So you suppose if an example and we do 20% is the returns the fund has generated. So 13% straight away we would be giving it to the investors, and 7% would be facultated with the company.
Okay, so there is a profit sharing ratio
Yes.
of 15%.
Yeah.
And anything above
About 20 is
25%, 25%.
So here I just want to add one thing. What the investor is getting right now is 13% assured. So that is he is not looking back from less than 13. If the market supports us, and if the project goes on with a good stream faster, then the delivery would be much higher than what Chirag is mentioning right now.
Okay, so but 13% is credited to the investor's account yearly.
Yeah, with additional of tax burden on that, with the subject to tax.
So coming to Chirag, what is the investment structure of the fund?
So investment structure is where as per SEBI mandate 2.5% has to be brought in by the sponsor, or the investment manager. So we are bringing 2.5% minimum, plus we have a commitment from friends and family up to 70.
Up to 7 cents. So we are anyways well above than 2.5.
Yeah.
So that itself shows that
Shows the confidence which we have in our fund.
That's it. Suman, what is the risk mitigation strategy? It's just a worst case scenario. Like how will you manage if things do better?
See, first of all, the land mitigation is zero. Secondly, we are taking collaterals. If and permissions are in place, because we are entering into the mid stage of the beginning stage where the cost money is required only for the approvals. So anyway, I don't see any challenges or risk in this. But despite that, if any it comes, because it's a real estate sector, it can pop up from anywhere. So we are taking the collaterals from the promoter who is to whom we will be lending on. So that is the last and final risk, which will be covering all the investor money along with the returns.
And what is the collateral requirement generally that you will be doing?
We are generally looking for 2 times, but we can negotiate with the depending on the promoter's profile.
Chirag, why should any real estate developer come to you for funding? Because you can go to NBFC, you can go to the banks, and there are various other channels. So why is it that we should?
Yeah, very good question. See, since I have been in this industry since last 15 to 20 years, so we have come across clients, varied nature of requirements which they are having. So if you see in the market, in most of the real estate players who are lending are maybe around 15-20 crores above only they are comfortable in lending to the developer. So the small ticket size lending is not there at all currently in the market. So many developers who want to grow. So for them, this is a right platform where they can come and they can ask for funds. And being in this industry, since our partners and our team members have gone through this real estate cycle, so we know where the promoter needs funds and how they can do. So I feel currently in the market there, I might be wrong, but none of the players are funding below 10 crores funding, or maybe 1 or 2 might be there, but I think there also means they require good vintage. So we are bridging the gap between the large scale developers and the small scale developers. So that's the USP of our product. So that's the reason means we feel real estate developers will come to us.
That's really good. And from a taxation impact,
see, taxation, this is a pass-through structure. AIF category 2 is a pass-through structure. The taxation will be directly taxed in the hands of the investor, and that depends upon the investor's profile, means whether he is showing as a business or he's showing as an investment. Typically, they show as an investment, so long-term or short-term capital gain tax, they would be attracted.
So most probably this is going to be a debt-based long-term taxing.
Yeah, as you put it right.
So Suman, what do you feel is the USP of this fund, just for synthesis?
Must be that what we are looking, as Chirag was saying, that we are looking for a small ticket size players. We are not looking to the higher mid segment or the larger segment. People in the small segments are not getting money. We go to the banks because banks' doors are closed for small scale because their paper are not up to the mark or they do not fall into the category of the. So we are bringing that USP for the small players, where they can come to us and we can find out the product, what they require, and we can come into the picture. First is that. Secondly, we are looking upon the redevelopment projects, where other players are looking also on the greenfield or brownfield projects. So the risk on that side is very high. And our category, we are taking only the approval risk, and moreover, that is covered by the collaterals. So the risk of losing money is zero or nil, whatever is said. So this is the +2 category where we differentiate from other players. We can base the funding of the small players at the entry level where the projects are clear and they need money, and also the collaterals and so that the capital is increased.
That's it. And from an investor standpoint, this serves as a best asset allocation tool. that
They get their money back despite whatever the situation comes, be it any natural calamities. And secondly, the project, the developers who are coming to us, they are also happy not approaching because there are a lot of processing fee. The time taken by the banks or in the NBFC is more than 3 months to get the money on their banking side. Whereas in our side, it will be a month or so, subject to the technical valuations and all.
So this is the first fund which is planned across around 50 years. Okay. So if all goes well, you plan to come with the second scheme as well. And that is what is the projection there?
See, basically, we also have a green shoe option as we said. So up to 100 crores, anyways we can do in this scheme as well. So when we cross this 100 crores, after the successful closure, typically we would want to start the second fund at that point of time. But we are open to launch a second fund depending upon how we are able to close these funds and how we are able to generate returns to an investor. So maybe if everything goes well, in a couple of years, another fund can be launched.
That's it. Thank you, gentlemen,
Yeah.
for joining us. I think it has been very
Thanks
good,
a lot.
and we wish you all the best in
It was
the
a pleasure.
success of this one.
Thank you.
Thank you.
Thank you.
Yeah.
Thank you.